If you think the biggest investing opportunities are always hiding in small, unknown companies, you might be making one of the biggest mistakes in the stock market right now. Because sometimes the best setup is sitting directly in front of everyone, hiding in plain sight, while the market completely misunderstands what the business has actually become. And today, that company is not some tiny AI startup, not some speculative biotech stock, not some hype-driven meme company burning cash with a fancy story. I'm talking about a company almost every single person on earth already uses, yet very few investors truly understand anymore. I'm talking about Meta platforms. And before you instantly jump to conclusions and say, wait, Meta, the Facebook company, that reaction right, there is exactly why this opportunity exists in the first place. Because most investors are still mentally stuck in 2018. They still picture Meta as a social media company surviving off Facebook ads, while trying to distract everyone with virtual reality headsets and metaverse presentations. That version of Meta no longer exists. The business has fundamentally transformed over the past few years, but the market still hasn't fully recalibrated how powerful this machine has become. And when you find a situation where the fundamentals improve dramatically while the narrative stays outdated, that's where massive opportunities are created. Now listen carefully. I'm not saying Meta is risk-free. No stock is. I'm not promising you guaranteed returns. What I am saying is this. When I look for investments, I follow one simple principle that has made me a lot of money over the years. I look for businesses that quietly become stronger, more profitable, more dominant, and more efficient, while the market either ignores it or underestimates it. That disconnect between perception and reality is where fortunes are made. And Meta, right now, may be one of the clearest examples of that setup in the entire market. Go pull up the stock chart if you want. Most people only remember the volatility. They remember the big crash. They remember when everyone said Meta was dead because TikTok was taking over. They remember headlines saying young people were leaving Facebook. They remember the metaverse spending panic. What they don't remember is what happened afterward. While everyone was busy laughing at Zuckerberg memes online, Meta quietly rebuilt itself into one of the most efficient profit machines on earth. Revenue exploded back upward. Margins recovered aggressively. Free cash flow surged. Advertising efficiency improved. AI recommendation systems got dramatically better. Instagram became even more dominant globally. WhatsApp started monetizing. Threads entered the market. Reels became a legitimate TikTok competitor, and the company turned AI from a threat into one of its biggest advantages. That's the part most investors completely miss. See, when AI first became mainstream, people assumed companies like Meta would lose. They thought AI would destroy social media advertising. Instead, the exact opposite happened. AI actually made Meta's advertising system dramatically stronger. Why? Because Meta's real business is not social media. Social media is just the surface layer. The real business is attention monetization at planetary scale. Meta owns some of the most valuable human attention assets in history. Facebook, Instagram, WhatsApp, Messenger billions and billions of daily interactions flowing through systems. Meta controls, and AI allows the company to monetize those interactions more efficiently than ever before. Every improvement in recommendation algorithms increases engagement. Every increase in engagement creates more ad inventory. Every improvement in targeting increases advertiser ROI. And when advertisers make more money, they spend more money. It becomes a flywheel. That is what investors are failing to understand. Meta is no longer just a social media company. It's an AI-enhanced advertising infrastructure company with global scale. Advantages that are almost impossible to replicate. And the craziest part, the market still often values Meta like it's some mature slow-growth business with limited upside. Now let's talk fundamentals, because this is where things become very interesting. Over the last several years, Meta has massively improved operational efficiency. Remember when Zuckerberg announced the year of efficiency? Most people laughed. But what actually happened? Meta cut unnecessary costs, streamlined operations, optimized infrastructure spending, improved monetization systems, and became leaner while still investing aggressively into future growth areas. That combination is extremely dangerous in a good way for investors, because when you combine massive scale with increasing efficiency, earnings can grow much faster than revenue. And that is exactly what creates explosive shareholder returns over time. The average investor focuses too much on revenue growth alone. But smart investors understand that margin expansion changes everything. If a company grows revenue 10%, but earnings 25%, the stock eventually notices. That's how giant companies still massively outperform. And Meta has another advantage almost nobody talks about enough: distribution. Do you understand how difficult it is to build global distribution today? It's almost impossible. Most startups spend billions trying to acquire users. Meta already owns the users, billions of them, daily, constantly interacting, constantly feeding data into systems that improve recommendation engines, advertising performance, and AI training capabilities. This is why Meta's AI strategy matters so much more than people think. Most companies are trying to build AI products. Meta is embedding AI directly into one of the largest digital ecosystems ever created. That's a completely different level of advantage. Every improvement Meta makes to recommendation systems instantly affects billions of users. Every AI enhancement improves engagement across the ecosystem. Every improvement creates more monetization opportunities. The scale here are hard to even comprehend. And then there's WhatsApp. In my opinion, WhatsApp might be one of the most underappreciated assets in the entire stock market. Think about this carefully. In huge parts of the world, WhatsApp is basically digital infrastructure. Businesses use it, families use it, schools use it, entire economies communicate through it daily. Yet monetization is still relatively early compared to its potential. That's important because it creates optionality. The best investments often have hidden growth engines the market hasn't fully priced in yet. WhatsApp business messaging, payments, AI integrations, customer support automation. All of these areas could become enormous over the next decade. And unlike many speculative AI companies today, Meta already has the audience, already has the infrastructure, already has the cash flow, and already has the distribution. That reduces risk dramatically. Now compare that to any hype-driven companies in the market right now. A lot of these stocks are priced for perfection. They need everything to go right. They need revolutionary adoption. They need flawless execution. They need market dominance. They need future profits that may or may not ever arrive. Meta doesn't need miracles. That's what makes this setup so attractive. Meta doesn't need to invent demand from scratch. It already has demand. It doesn't need users. It already has billions. It doesn't need advertisers. Businesses already depend on the platform. It doesn't need profitability someday in the future. It already generates insane amounts of cash. All Meta really needs to do is continue executing competently while AI amplifies the economics of its ecosystem. That's it. And that's a much safer setup than most investors realize. Now, of course, there are risks. Regulatory pressure is real. Competition is real. Platform shifts are real. User behavior can evolve. Governments can create problems. Economic slowdowns can hurt advertising budgets temporarily. Those are legitimate concerns. But investing is never about finding perfection. It's about probability. And when I look at the probability distribution here, Meta looks incredibly compelling because the downside narrative already widely known. Everyone knows the risks. Everyone talks about them constantly. But the upside narrative, the idea that Meta becomes an AI-enhanced digital infrastructure, giant with expanding margins and multiple monetization engines, is still not fully appreciated. That asymmetry matters. Now let's talk about AI assistants, because this is another area investors may be underestimating massively. Meta is integrating AI directly into consumer products used by billions of people. Think about the strategic importance of that. Most AI companies are fighting to acquire users one by one. Meta can deploy AI features instantly across Instagram, Facebook, Messenger, and WhatsApp. That changes the economics completely. Imagine a Dynamo support running through WhatsApp business accounts globally. Imagine a content generation tools for advertisers. Imagine AI shopping assistants integrated into Instagram commerce. Imagine AI-driven recommendation engines becoming dramatically more personalized and addictive. Every single one of these improvements increases monetization efficiency. And remember, Meta's biggest strength is not charging consumers directly. It's monetizing attention indirectly through advertising and business tools. That means Meta can scale AI adoption faster because users don't need to make a purchasing decision every time they interact with the technology. That's incredibly powerful. Now let's address the elephant in the room, the metaverse spending. A lot of investors still hate Meta because of Reality Labs' losses. And honestly, I understand the frustration. The spending numbers are enormous. But here's the thing most people miss. The core business is so profitable that Meta can afford to take massive long-term bets without threatening the company itself. This optionality is valuable. And even if the metaverse vision takes far longer than expected, the core advertising and AI ecosystem alone may justify significant upside over the next decade. That's the beauty of this setup. You are not relying on one moonshot. You already have an elite core business generating extraordinary cash flow. The speculative upside becomes optional rather than necessary. That dramatically changes the risk profile. And here's another thing people overlook. Meta has become culturally underestimated. This happens to giant companies sometimes. People get emotionally attached to old narratives. They stop noticing evolution. They assume the best days are over because the company feels familiar. But businesses don't care about narratives. Businesses care about economics. And Meta's economics remain incredibly strong. Actually, in many ways, they're getting stronger. AI is improving advertising precision. Reels monetization continues improving. Instagram engagement remains dominant globally. WhatsApp monetization is still early. Infrastructure efficiency is increasing, and the company continues generating mountains of free cash flow. That combination is dangerous for anyone betting against it long term. Now let me explain why this matters from a stock perspective. In the short term, stock prices are emotional. They move on headlines, fear, excitement, macro news, politics, rates, narratives. But over long periods of time, fundamentals dominate. Revenue growth, earnings growth, free cash flow, margins, return on capital. Eventually those things drive valuation. And when a company compounds fundamentals faster than the market expects, the stock eventually catches up. That's the opportunity. Not because the market is stupid. Markets are actually very intelligent overall. But markets can become temporarily distracted. They can overweight short-term fears and underweight long-term economics. That creates openings for patient investors. Now, could Meta experience volatility? Absolutely. Could the stock drop 20% during a recession or market correction? Of course, but volatility and risk are not the same thing. A volatile stock can still be an incredible long-term investment if the business keeps strengthening underneath the surface. And that's what I believe is happening here. The key distinction is whether the business itself is deteriorating or improving. And when I look at Meta's business, its engagement, monetization, AI integration, infrastructure, margins, and ecosystem, I see a company becoming stronger, not weaker. That matters enormously. Here's another concept investors misunderstand: size. People assume giant companies cannot outperform anymore because they're already too large. But large companies can still generate enormous returns if profits compound faster than expectations, especially when operational leverage kicks in. And Meta has operational leverage everywhere. AI improves ad efficiency. Improved ad efficiency increases advertiser spending. More spending increases margins because infrastructure costs don't rise proportionally. Better engagement increases time spent on platforms. More time spent increases monetization opportunities. Again, it becomes a flywheel. That's what elite businesses do. They create systems where success reinforces itself. Now imagine where this company could realistically be 5 years from now if current trends continue. AI deeply integrated across the ecosystem, WhatsApp monetization expanding globally, Instagram commerce becoming larger, business messaging scaling aggressively, advertising becoming even more personalized and effective, infrastructure becoming more efficient. You don't need crazy assumptions for earnings power to become significantly larger than today. And if earnings become significantly larger while valuation multiples remain reasonable, the stock price has a very high probability of moving substantially higher over time. That's how long-term wealth is actually built in the market, not by chasing every shiny object, not by gambling on lottery ticket companies with no profits, but by identifying elite businesses before the market fully understands the next phase of their evolution. And that's exactly why I think Meta deserves serious attention right now. Now, am I saying Meta will go straight up? No, markets never work like that. There will be corrections. There will be scary headlines. There will be volatility. There will be people on social media telling you the company is finished every 6 months. That's normal. But if the underlying business continues improving while fear and outdated narratives dominate investor psychology, that creates opportunity for disciplined long-term investors. At the end of the day, investing is actually pretty simple conceptually, even though emotionally it feels difficult. You want to buy exceptional businesses before the majority fully appreciates how exceptional they are becoming. And right now, I strongly believe Meta fits that description, not because of hype, not because of some fantasy projection, not because of a magical AI dream, but because the business fundamentals, the ecosystem advantages, the AI integration, the monetization engines, and the global scale all point in the same direction. And when multiple powerful trends align behind one company while the market narrative remains partially outdated, that's when very asymmetric opportunities can emerge. So here's what I'd recommend you do next. First, go study the company yourself. Don't blindly trust anybody online, including me. Read the earnings reports, study the cash flow, look at engagement metrics, understand how the advertising ecosystem actually works, learn about AI integration across the platforms, build your own conviction. Second, stop looking at Meta as just Facebook. That framing is obsolete. You need to understand the company as a global AI-enhanced digital infrastructure ecosystem. That mental shift changes everything. And third, understand that patience matters. The market doesn't always recognize value immediately. Sometimes fundamentals compound quietly 4 years before the stock fully reflects reality. But when that catch-up happens, it can be extremely powerful. That's why I believe Meta may be one of the best large-cap investment setups in the market today. Not because it's flashy, not because it's hidden, but because the market may still be dramatically underestimating what this business is actually becoming over the next decade.